Now, if we look at the recent trends, Tesla did beat Wall Street estimates with its latest financial update, generating a revenue of $25 billion and diluted earnings per share of 78 cents. The business also produced 480,000 vehicles during the period, which is up 86% year over year. And however, shareholders were not happy to see that Tesla's gross margin has gone down from 25% in the second quarter of 2022 to 18% in the most recent quarter. So that is down from where it was last year. Tesla's gross margin in the previous year was 25% and now it is 18%. So now this is a cause for concern for the investors. And the management was forced to cut the prices of cars multiple times this year. And that is the reason why you don't have a lot of gross profit margin. And I think you should understand why they had to do that. They had to do that in an effort to boost the demand at a time when consumers have been dealing with high interest rates and inflationary pressures. And Warren Buffett always said that now when you look at the company, when you're analyzing a company, what you should also look at is the economic situations. Now with higher interest rates and inflationary pressures where prices of commodities are going up very frequently, how many people would go ahead to buy a Tesla? So even the people who would normally want to buy a Tesla with this high interest rates and inflation, people are likely to postpone their plan of buying a car. And in that time, if you offer your car at a discount, then a little bit more percentage of people are likely to buy. But when you do that, sure, the sales are up, but the gross margin also takes a hit. But I don't think Tesla did anything wrong here. Warren Buffett always said that you should always operate in regards to the economic situations of the country. And so the pricing cuts certainly deserve a lot of the blame for the shrinking operating margin too. And however, Tesla's research and development expenses of $943 million during the quarter, which were up 41% year over year, hurt the profitability as well. Tesla wants to grow rapidly and Tesla wants to be ahead of the EV race, which means spending a lot of money in research and development. And those expenses were at a tune of $940 million, almost $1 billion. Tesla spent almost $1 billion on research and development in one single quarter, which was up 41% as well. Now even the margin is high, and even just imagine spending $1 billion a quarter on research. Now that takes a lot of toll in the profitability as well, but in the long run, the $1 billion spent in the research and development would be very much profitable. And though people can't see it today, the $1 billion spent today on research and development in a quarter won't go to waste for sure. And the benefit of continuously spending heavy money on research and development is that it can maintain Tesla's lead as a trailblazer in the industries, which Tesla needs to do so that its market cap does not go down to its competitors. So this is very crucial for Tesla, which means it is crucial for all of the investors like us as well. Now, looking at the bigger picture, Tesla has quickly become a powerful brand in the technology and the automotive sectors, known for its massive innovation, disruption, and forward-thinking designs. And additionally, thanks to the company's brilliant investments in building up its manufacturing capacity, it's starting to develop a cost advantage when making automobiles. The company is profitable while a legacy automaker like Ford constantly loses money in its EV division. Now, this is something that Cathie Wood mentioned a couple of years before, that even for companies like Ford and GM to compete against Tesla, they will have to operate at a margin of loss. They'll be losing money while trying to compete with Tesla. And that is why Ford and GM could never become a competitor to Tesla. And having this competitive advantage puts Tesla in a position to make progress towards Elon Musk's long-term goal centered on autonomous self-driving. And while Tesla does sell cars with its branded full self-driving FSD capabilities, they are not fully autonomous at this point of time. This means that right now, a driver still must pay attention and be ready to intervene and take full control if necessary. And if full autonomy is achieved, something Elon Musk believes could happen later this year, but even if it happens a few years from now, it could be a huge financial advantage for Tesla. That's because this software, coupled with Tesla's expanding manufacturing capabilities, could really turn the company into a provider of robo-taxis, which could experience unprecedented demand from consumers and drive outsized revenue and earnings growth growth over time, and then the Tesla stock price will all make sense for everyone. And now this might be a too far-fetched goal for Tesla, but if it achieves that, the amount of changes it could bring to this world and also the revenue Tesla could be making would be enormous. And the short-term vacancies in gross margin and profitability really they're pretty minor at this point relative to the long-term picture. And in the Q2 earnings call of this year, Elon Musk said that autonomy will make all of these numbers look pretty silly. He has been overly aggressive with his timing deadlines before, so who knows when and if it will happen, but when it does, but it's also pretty hard to bet against Elon Musk at this point. And thank you so much for watching. I hope you all have a good day.